Oh, how are we doing? Look, I'm on time. Wow, that's amazing. I'm on time on a Thursday. Right. I haven't looked at anything yet. I've literally just turned my computer on. So prepare for chaos and not being prepared for anything this morning. So I posted in the Telegram group this morning. Morning, Alex. Morning, Ladder. Morning, Jane. I posted in the Telegram group this morning about a couple of speculative trades I've put on my fund and put it on this evaluation account as well. After these moves off of what's his face? Powell speaking last night. I was going to say Bailey then. So obviously Powell spoke last night and sent the market into absolute freefall for the US dollar, which smashed the indices through the roof. We had 300 plus ADR. I think this move on the NAS was NAS is 200 ADR roughly, isn't it, or something? 239. We got 586, so 250% ADR. I think the S&P did. The S&P's hello. Pick up charts. Oh well, when that decides to actually draw in, I think the S&P did 140 off of a 57, so near as damn at 300 basically. This is as far as I'm concerned, this morning Themba, this is a total overreaction. If you scan through the actual comments and unpick what Powell was saying, this isn't as bullish as bearish as the market seems to have thought. I don't think, anyway. The time to slow the pace of rate. So basically, remember, inflation is positive for a currency, negative for everything else, but positive for a currency. And interest rate rises are positive for a currency usually as well, right? As long as the rest of the economy is doing okay. If the rest of the economy is not doing bad, jobs, housing market, you building permits, M2 money supply, all of that sort of stuff, then it can have a negative effect. But what he said basically was interest rate hikes, slowing the pace could come as soon as the December meeting, which is fine. Slowing the pace does not mean they are reducing. What we were forecasting was between a 0.5 to a 0.75 increase. What he's probably saying here is we're probably going to go to a 0.5, so not a 0.75. The market's factored in a 0.75 increase. So this reaction is, it's not as much as we thought, so we need to sell off a little bit. But what they're going to do is factor in that the interest rates are still going up. So this is, I think, a profit take move. But I think this move's going to continue. So I'm basically shorting this morning. I'm on the DAX already. The DAX entries here. NAS entries here. This is 5-minute chart. Obviously, this is an hourly. So basically, this morning I've shorted underneath this hourly candle and stop above the high. If it gets stopped out, it gets stopped out. That's fine. If it doesn't get stopped out, this is a 10K trade in theory. So I just think this is a massive overreaction, but I might be wrong. It makes sense to moderate the pace of interest rate increases. We are going to continue to increase interest rates. Yeah, maybe not at exactly the same rate every month. That's fine. We know that. Morning, Arnold. Policy will most likely remain restrictive for some time. We will keep increasing interest. Everything he's saying here is we're going to carry on doing what we're doing, which should strengthen the US dollar. Seems probable the rates are ultimately going to go somewhat higher than policymakers thought in September. We're not doing as well as we thought we were, guys. You know, it's all the same stuff. Why the market's gone completely opposite direction is beyond me. I don't know, but I don't know. It's just bizarre. Inflation data was a welcome surprise. So inflation data seems to have crept down a little bit, which is good. So that is negative for the US. And the other positive was that the employment market salaries seem to be starting to catch up with inflation, which is another good thing, which means that all this stuff leads to them being able to reduce interest rates moving forward at some point. But at no point in his speech yesterday did he say, we got on top of this. Don't worry, December, it's all going to be over. There's still talk of a recession. There's all sorts of other stuff in here which would be positive US. Wage increases now being offset by inflation for the majority of workers. That's fine. But wage increases have nothing to do with unemployment. Recessions and interest rate increases cause squeezes on building permits and business profits. Business profits then reduce, which increases people getting made redundant. Redundancy. Read this. This is not, I don't think, as bearish as the market has thought. But I might be wrong. I'm not an economist, but this is kind of counterintuitive to what you would usually tend to see off of a speech of that sort of magnitude, really. But Japan's trend inflation remains low, which is more important than guiding monetary policy. Yeah, Japan's inflation is low. Again, negative yen. But I don't know. It's so difficult to unpick all of this at the moment. It really is. It's critical to have wage growth increase. Yeah, just the obvious. But right. So what was the Swiss CPI? 3%. So the Swiss got a target CPI. Let's just have a quick look at what the Swiss franc did. Just going to monitor this. Market's opening in 3 minutes. Let's look at US dollars. Swiss is an idea. So negative Swiss franc at the moment. The back of the Swissy rate increase. Let's look at the other Swissies to see. Not against the pound. Euro's coming down against the Swiss. Not a lot of movement by the looks of things actually off the Swiss franc. So that was the CPI month on month. So it's 0 as expected, basically. So no real impact off of that we can see. So I'm picking that yesterday. I think that was a total overreaction on behalf of the US dollar. But when you look at it on the grand scheme of things, right? So looking at the US dollar, all the US dollar CAD, for example, did yesterday is undo the gains of Tuesday, right? So it's not as dramatic as it actually looks on the stock indexes. We had a drop, back down to Monday's, but it's still above Monday's low, so it's just a pullback. Yen obviously has come down because we've got a fairly strong yen, but it's not actually as dramatic as it looks when you look at the FX pairs, what it's done to the FX market. Look at the euro coming down against the US dollar this morning. Euro's coming down across the board this morning. So that's off the back of the Swiss franc rates. So yeah, that's my take on it. I think it's a bit of an overreaction. So as I say, this morning I'm looking for a speculative short to undo. I'm going to target 50% of this. I mean, this one here on the NAS is $3,000. The DAX trade, I'm targeting an ADR on that, which is 2.5. So it's 5 or 6 grand. But I will adjust my TP if this does start to come down heavy this morning. What I might do is take a partial and go for a runner, because this could be, if you look at the NASDAQ, this could easily be running liquidity. The other option is, obviously, this morning they come and take this high, which is an obvious trade. I don't really want to go that. I've got a little bit too much on the lot size to actually allow my stop up there. That'd be about, I don't know what that would be. Yeah, it's too much. Way too much. Not risking that much on it. So yeah, I'll either get taken out or I won't. So we'll see what happens at the open. Market's just opened. The EA is going to, that I'm testing, is going to still obviously trade this morning. So there's an opportunity if we do break out and just run for the hills, I could get another 3 positions short on this morning as well. So, but we'll see. You know, it's a decent risk trade as far as I'm concerned. Wow, that euro's really coming down off the back of the Swiss franc rate announcement. Big one. So news today, obviously we've got the CPI, so inflation figures for the Swiss franc have just come out, as expected. This afternoon we've got US news again. So we've got PCE, which is at 1:30, an hour before the market opens, and then half an hour after market open we've got PMIs for manufacturing. So there's another 2 catalysts here this afternoon to move the market. So don't forget, don't forget what the market does. The market, their job is to run around and find liquidity pools to grab money to move orders, basically. So look at this move that we had on the US dollar CAD and where we went. Yeah, and look at where we turned. Yeah, so there's nothing to say that this move here that's just taken all that liquidity is just not a liquidity grab on everybody that went long there, right? So think about yourself as a trader moment. You went long on Tuesday rather. You're sitting there with a stop under there waiting for a pullback long to add into your position. They've just taken you out. What does it normally do after it takes the liquidity? It runs the opposite direction. So there's a lot going for a reversal move on it, but it's a theory. Some people are going to be right, some people are going to be wrong. You've got a 50-50 shot of a trade working out at every point in time, haven't you? So we'll see. But if we get a strong move back down on the US today, obviously, there's 2 things at play potentially here. We've obviously got the Santa rally for the indices, which potentially is on the cards. And this could well be the start of that Santa rally. We've been sitting in this accumulation. Yeah. So since the US news came out, the inflation figures, we've basically gone sideways. We've been stuck in a range for pretty much 2 weeks. All we've done is come down and taken all the liquidity at the short side. Yeah. Now we're pushing up potentially. Now the liquidity pool here is there because this high is lower than that one. So there's liquidity sitting here. So yesterday we took that liquidity. Whether there's enough liquidity sitting there for them to warrant a push, I don't know. If they do that, and this is going to be a reversal, that could be the move. If not, we could be going on to our Santa rally. We're going to find out in the next couple of days, aren't we? It's very, very, very US heavy, the news this week. Obviously, we got all the non-farm yesterday and tomorrow, and the unemployment rates, that's the important one, the unemployment. What people are earning, what people are being paid is irrelevant. How many people are in jobs? That's the important thing, because jobs drives the economy, jobs drives spending, jobs drives the housing market, jobs drives everything. So the more people that are unemployed, the worse it is for everything. So that's the key. That's what really moves the market on Friday, on non-farm payroll day, not this. It just happens. They call it non-farm payroll because it comes out on the same day, but that's what's driving what's going on. So, but we'll see. Let's have a quick look at the DAX and just see what's going on at the open. So far, there's your opening range, fairly tight this morning. Other news overnight, I don't think there was a lot. Not to look yet, just see if there's anything else out of Japan. Consumer confidence is low. Typical. DAX has just triggered along. So opening range is there. We've just taken out the opening range high. So we'll see what happens on that. Morning, Stevie. So ADRs, we've got, obviously we had a lot of ADR hits yesterday. Everything moved off the back of Powell's speech yesterday. Whether or not it will continue to do so, we will see. I'm tempted to cancel that buy on the DAX and just get out of it, because I'm just going to reduce risk on this DAX trade. I'm hedged on it basically now. Or should I'm going to let it go because the EA's taken it, so it's $500 loss. It just knocks $500 off the profit if I do get my short working. So so looking for the Asian, the Globex low, called the Asian low, the Globex low on the NAS to be taken out. If we break that, I think we've got a very good chance of a collapse this morning. But we'll see how many buyers there are in the market. Asian stock market was pretty strong overnight, but obviously they weren't awake when Powell was talking. So obviously all that order execution is off the back of what Powell said. So might go for the gap close first. There is no gap on the DAX. Yeah, so I was making pretty good progress on my DAX yesterday. And yeah, I'm now back up to my initial DAX order. So I was all the way down here. So I've got to put in a 150 ADR just to get back to where I was yesterday now after that shenanigans. But if it is going to come down hard, it's going to come down hard. So we'll see. So I stopped out of that long. Well, maybe I should have taken that long off. Try to get into a sell short. Stop above the high. These are tight stops this morning. So we run the risk this morning with the opening range breakout strategy of getting stopped out basically on both. Get whipsawed. Get mornings like this. When I was doing the back testing, there's nothing you can do about these. If you get a tight range opening and it doesn't go out the gates, you just get stopped out in both positions. Nothing you can do. But hopefully we get an opening range break to the low, and then we can add 2 positions and drive. Nasdaq's testing, or trying to test the lows. So we haven't got any news this morning. So the market's not got any reason to hang around this morning waiting for any news to come out. So we should just get price action this morning. We've had 2 very rangy days until Powell spoke. So if you look at what we've had on the Nasdaq, for example, over the last 2 days, it's been absolute hell trading conditions. So you can see, obviously, we've opened, we've broken, we've gone into a range. We've opened, we've come down, we've gone into a range, and then obviously Powell. And the previous day was pretty similar. So we've had 3 sessions really where I've been chopped to pieces in these sessions. I'm down about 4.5% on my account, my funded account, over the last 2 days, because I just have been chopped about. I've been in trades and I've sat in them for an hour and a half. It's always, I have this thing when I used to scalp, and I think Steve Malrow used to talk about this as well. When you're in a trade, when you've got a trade idea, a breakout style trade idea, or a mean reversion trade idea, it should really play out straight away. If it hasn't played out for you within 3 or 4 candles or 5 candles or so, it's probably not going to. And it's one of those rules that everybody, me included, tends to try and ignore, because you have that hope, don't you, of the trade actually working. But when you get into a trade, if you go short there and it pushes down and then it just goes like that, it's probably not going to work, because what you were expecting to happen didn't happen. Like the opening range breakout, yeah? If it doesn't break within a couple of candles, it's probably not going to. So you should really close your trades out. But it's a difficult thing to do. But I've been chopped around and sat in trades for a good hour or 2 over the last couple of days, and every single one of them has just gone into profit, a little bit out of profit, in profit, and eventually stopped out. So I just had one of those weeks where it's all been hell. But obviously now we've got some volume and some volatility in the market. We need to see obviously if that will start to unravel itself. So. But at the moment we're just inside bar. It looks choppy today. I think this is probably going to be a stop out as well. We'll see. But it's choppy as hell. Big, strong, long wick, completely reversing candle. So market's not really got any direction at the minute. Oh, that's close. Nas is pushing back up again as well. So it looks like this wants to go higher, potentially today. Maybe not. We'll see. Need to get a proper break. We haven't had a proper break outside the opening range yet. So we haven't broken and held outside the level. So a bit directionless at the minute. Neil, short on Aussie CAD, but does not seem to be turning yet. Could you have a look and give me your thoughts? Yeah, we'll go through those in a minute. I'll give that now, actually. So I'm in New Zealand CAD. Same, I'm stuck. Same as you, I'm stuck. I think the EA took another trade on New Zealand CAD for me yesterday. Yeah. So yeah, I'm stuck in the squeeze. Canadian dollar will move with the US a lot of the time. So obviously, if we're going to get that reversion on that move yesterday on the US, we will probably get some strength coming through on the CAD. This is obviously, there we go, just breaking down now on the DAX. So we did hold that level. That's a nice miss of my stop, Mr. DAX. Thank you. Now, if we can just close down below that low and then pop out the low there, that'd be lovely. Thank you. Do as you're told. So yeah, I'm in New Zealand CAD. So Aussie CAD will be in the same situation pretty much. You've got a lot more movement on the Aussie CAD from a pullback perspective than we've had on the New Zealand CAD. But equally, yeah, it's still pumping. So these levels that I've got drawn in here, that rejection that we've had this morning is this high in here, which is basically this level here. Yeah, it's been respected multiple times, this level. It's broke through, which is this line here, which got respected again there, got respected again there, sort of respected there and there. So this whole zone here, from these lows to this high and this low here, this zone here is where I would expect some selling pressure to start to build, because a lot of people will be eyeballing these levels. So where you are now, if you need to get in aggressive, this is probably the area that you want to have a look at, basically. You're on 4 days up now, so 3 days up. So we're due, you know, after 3 or 4 days of push, you tend to get a pullback. Push, pullback, push. We're due a pullback. How deep that pullback's going to be, I don't know. If we can get some decent momentum off of the US dollar, and obviously Powell did not help the situation. Well, I don't know if Powell did. I don't think Powell was probably expecting this reaction either. But what Powell said yesterday didn't help the situation. But if that does start to unravel and we do start to get that strength coming through on oil, you've got a really good chance of strength on the Canadian dollar. We just need the Aussie to sit still for a bit, which is no reason why it shouldn't. So yeah, it's look good. Look at the wicks as well on the daily. Yeah, these are not strong closes. Yeah, look at this. You know, when you get these big rejections starting, yeah, you tend to get that move back down. So we push up, we start to reject, we push up, we reject, we push back down again. Same here. You push up, you reject, reject. Yeah, so this is them trying to push and the daily candles going, no, we're not interested. Same sort of thing here, look. Wicks to the upside is buyer destruction, basically. It's the buyers pushing hard and then the sellers going, nah, we're not interested in going any higher than this. And this is what we're getting now. So we just need one down day and you'll probably get that start. Similar to that day, but obviously we had this, you know, US dollar being so weak. Just gathered into extra positions now, short. So got another short entry there on the DAX. Hopefully we get an ORB, or not an ORB, but a low break and hold. So this area here is key. Don't want to see that reject. Want to see that flush through the bottom of there and close below. We've got 3 minutes left on this candle, so we'll see if we can get that close. If we don't get that close, I get the feeling we may be in for a nasty little choppy day today. Let's see. So NASDAQ up to NASDAQ, the US indices are just sitting sideways at the minute. Nothing's really got any interest in direction this morning. Christmas trees. But yeah, I think the problem with the CAD at the moment is, there we go, there's a break. Now see a flush, please. Let's get the flush out of the lows. There's a load of limit orders sitting here. So this is all these limit orders firing. You can see it like pushing off the low. Limit orders firing. We just need more sellers to eat that whole limit orders. Then all those guys that are going along with their limit orders will puke here. We'll get a little flush out the bottom. There we go. So that's all the long limit orders puking or stopping out basically. So what we need now is pull back and drop. Hopefully we'll be on our way. Ladder, it looks like another chop fest. Yeah. Yen seems to power up a bit. Yeah, so yen's powered up a little bit as well, which is good. Whoops, wrong one. So the yen, as I say, the yen, I feel that the yen at the moment is starting to strengthen. It's a good little flush that. Got 1 minute left on this candle. Let's see if we can hold this low. If we can, I think we've got a very good chance of a strong trend day today, which would be very nice. Yeah, so the yen's basically, I think we're starting to power up and we're seeing pretty good momentum getting going in the yen. So it's what I just want to see this. So we've got this. You've got to visualize into the future what you think is going to happen. So where we were going sideways for such a long time for something like the Aussie yen, for example, you can see now we've got the moving averages starting to separate. We're starting to get into that trend. So you need to look into the future as to what's going to happen with those moving averages. This is the first test of the 24. We need to make a new low and then pull back somewhere. That's where I'm going to start to get interested. You could get an early position on any yen pair now because we have broken structure on a lot of these yen pairs. So, you know, this one's obviously flying away. The CAD's been weak, but weakness is, this is going to stop. This is a lovely ADR this morning. Look. Nice reversal at 100 to 125. So yeah, it's whether or not the yen can sustain this. This strength, and I get the feeling from what we're seeing coming out of Japan now after this intervention, the market seems a lot happier with the yen. They're not increasing their interest rates. They're keeping inflation where it is. it's just the economy bit. They're in so much debt, and their economy is in so much trouble at the moment, which is why they're keeping inflation where it is. But they are going to have to do something about it. They just need to keep their wages above inflation, and they'll be all right. But that's not an easy math to do. So, but yeah, I don't know. We'll see. But I'm waiting a little bit more on the yen. It's kind of one of those, like, the structure's there. Like, look at Swiss yen. You got a high, you got a low, you got a lower high, you got a lower low, you got just about a lower high, just about a lower low. It's not. It's more of a. At the moment, the yen is more of a tight downward channel than a trend. And I want to see some real strength coming through and a decent pullback. That's when I want to get in after that decent pullback, and it probably need to be done on the hourly. So hourly RSI extensions to the upside. There you go. We had one yesterday on the Swiss yen. That's the sort of thing I'm looking for now. But I wanted to see this happening on multiple yen pairs to prove really that yes, it's the yen and it's not the other currencies doing it. That we are getting strength in the yen in the Asian session, and it seems to be working at the moment. But we'll see. So I like the yens short at the minute. Beautiful flush on the DAX. So break evens on all positions. I'm just going to move my big one as well to break even. NASDAQ, that flushed yet? Okay, so we've got the lows, those lows broken. So we're looking for that's the next low, which is the Globex low, session low. So looking for that to break. If we can get that on, I think we've got a very good chance of unwinding. Let's see. DAX is definitely falling out of bed. Bye-bye. Pound US dollar. Yeah, shout out any pairs you want to have a look at. Oh, wrong one. Because I will go through ADRs and everything, but I did a full rundown of all pairs yesterday, so I'm not going to go through every single pair this morning. Mainly focused on US today. Jesus, go for it, Mr. DAX. See, these are the days, yeah, when you get these choppy days, these are the days, and I keep saying this, trend days are the days where I make my money. I get chopped around, I lose a bit, and then all of a sudden I make 10%. And it's these days, if you can get these days and you could hold these days, which is why I'm letting the EA do its thing, trying not to intervene. You can, it's very hard. I've got $3,200 profit sitting on the table right now. It's very, very hard not to just stick that in the bank and go, thank you very much, that's my month done. Resist. Right, pound US dollar. Yeah, so pound US dollar, pound short, US long. Difficulty we've got at the moment is obviously this move yesterday. We need to see this undone and make sure this is definitely a crime. Going to lock some of this profit in on this candle. Got 20 seconds left, and this is going to lock in 30 points. I've obviously got this runner, so I'm leaving this as a runner. This trade here, I'm not touching. That's going to be my runner for the day. That's the big one. Okay, so profits locked in down there, which is nice. The pound US dollar, obviously, Powell obviously gave the pound a massive boost yesterday. We've got these highs. Now, the thing, obviously, this week, whatever you do this week, we've got non-farm payroll tomorrow. So any kind of movement that you see ahead of non-farm is likely to be undone. We've got a strong move to the upside. So I'm bearish on pound US dollar. purely because I know the pound is very, very weak at the moment. We're expecting US dollar strength. And after this move that we've had today, if I see these markets completely unwind today, as they seem to be wanting to do, that would give me a lot of confidence of a strong US dollar moving forward, because this was totally the wrong reaction to the news. Yeah. It's like saying, holding up a card that's red and everybody's shouting orange. Yeah. It's just, why would you do that? Why would you, when he's just said to you that he's going to keep increasing interest rates, which will boost the US dollar, why on earth would you tank the US dollar and the indices fly up? It totally flies against what should be happening. So if that is the case, then this move up, this is where you want to be selling pound US dollar right now. M15 reversal out this morning. Because this should and could be the start of, if we can get the move on, you can get it to break even, a fairly nice collapse. We've got pound news coming up next week. Sorry, not next week, week after. Where are we? CPI, yeah, there it is. So, and the rates. So it's all the same. We've got obviously the Fed rates on the 14th. So this is the key week. This one here, which is not next week, the week after. We've got the GDP figures. We've got the inflation figures. We've got the inflation for the pound. We've got the rates for the US dollar. We've got New Zealand's GDP figures. We've got all the unemployment for Australia. We've got the policy rate for the Swiss. We've got the policy rate for the pound. We've got the policy rate for the euro. We've got the retail sales for the US dollar. This week is, and we've got the ECB press conference. This week is going to be utter chaos. So the market is going to want to factor in whatever they want to do. They're going to want to factor it in before that week. So this week and next week, we should see some strong movement in the direction that we should be heading, which for the pound is down, the US is up. So in theory, fundamentally, this move yesterday, if they got up to here today, if you got an ADR hit on this for any reason today, if you got anywhere near ADR on this, I'd be shorting it, and I probably will, because it's not going to be right. I don't think you're going to. The way that the indices falling out of bed this morning, so I have to laugh. I love when you get a runner like this. $5,000. Hold. Yeah, I mean, when you get a move like this happening, it just kind of cements what, you know, your sort of fundamental theory. And obviously this candle that we've had this morning, reversal on the hourly, would indicate a strong US dollar. So yeah, shorting. I'm expecting the US dollar to take out those highs by the end of tomorrow, if this move is incorrect. You know, the indices certainly seem to be indicating that this morning, obviously. So we'll see. Obviously, don't forget, if I'm wrong on this, and this is fundamental shift to the downside for the US dollar for some reason, all we're going to do is get a pullback for longs, but I really can't see it. So I'm only targeting half of that move, but the way they're going this morning, 30 seconds left on this candle. If you want to take some, if you're in this with me, you want to take some profit, take it. We're at ADR basically, so be careful. Yeah, we've done ADR in 15 minutes, so this is a big move. Aussie to New Zealand is hurting your brain. Oh, sorry. So, Ivan, set target to 117748. I mean, my target on this one would be here. So this propulsion gap is a break of that high and follow through. So this is where the buyers stepped in. So we had an accumulation propulsion gap breaking the high and that high. This propulsion gap is where I would target, which is 115,760 area. So you can go for 11748 which is somewhere around here. But I can't. What's the logical reason for that? 174. I mean, this is what's. Why would the market turn there? Stopped out of the DAX shorts. I'm going to move my TP. So this has come straight off of ADR. Look. Sorry, I just need to adjust my TPs on this DAX. I don't think. I'll come back to that pound US dollar in a minute. Right, so this is potentially where we may see if this is going to unwind this move, this is where we may see reaction. I can't see we're going to put in a 175 ADR move. Can you? I just banked. I've banked $1,500 this morning, so screw it. I'm going for that. Cancel that pending buy. So this is a break here. This is a free trade, basically. So I'm just going to run this. I can't see how we're going to get down to 175 today unless the news on the US dollar is dramatically good. There's PC and PMIs. There's a good chance we might get a strong move. And obviously got that one still running. So Nasdaq has just taken out those lows and retraced right back up again. We'll see. Might lose a little bit on that retracement if it happens. So yeah, pound US dollar. Yeah, I don't see any reason for that level as a target. We've got an old kind of resistance support there and that level there, I guess, but this is where the move started, so somewhere around there or in that propulsion gap, really. I mean, it's up to you where you want to hold to, obviously, but maybe take half there and let some run. Aussie New Zealand, yeah, so Aussie New Zealand is a pain in the backside at the moment as well. Can't get started, just cannot get started on this thing. It's just not doing it at the moment. So the Australian dollar, we've got some nice weakness against CAD this morning, weakness against the Swissy, weakness against the yen, weakness against New Zealand and against US. So it's just basically weak against everything again. The New Zealand dollar is still not giving up the ghost at the moment. It's still fairly strong. I've got New Zealand dollar CAD short on and I've got Aussie dollar New Zealand long on. So I'm double exposed on the Aussie at the moment, and it's just not giving up the ghost. It just can't seem to get a break at the minute. We've just had negative news after negative news after negative news coming out of the Aussies. Yeah, their CPI was a miss. So it's just I don't know why it's going quite so bad, but it is. The statements off of from low weren't particularly bad, but it just doesn't seem to have any strength at all at the moment. So the real helper on this is going to be if we can get a weak New Zealand dollar. So the problem with that is news. We haven't really got any New Zealand dollar news scheduled. We've got GDP figures next Wednesday, but apart from that, there's nothing else really that is going to potentially reverse the New Zealand dollar. So I'm still in it. I'm holding it, but it's it's painful. They're all painful. New Zealand dollar CAD is painful, and Aussie dollar New Zealand dollar is painful at the moment. I drew this in yesterday. Oops, wrong one. On what time frame was I looking at? 15-minute, I think. Yeah. So I drew this on the 15-minute yesterday on the Aussie New Zealand. I think I posted this in the Telegram group. So we've got a symmetrical. It's not really a symmetrical triangle. I suppose it might be actually. 1, 2, 3. 1, 2, 3, 5. Yeah, so it's broken out. I thought, look weird, my data's not updated. It's way with Forex is terrible. So yeah, we broke out of it yesterday, and we've double bottomed again here today. So yesterday's low is just being taken out. If this low goes here, I think I'm going to have to start scaling out some of this. It's just getting a little bit too painful at the moment. I finished on 23% last month, so I had a good month, but I'm sitting in a lot of drawdown. I'm over 15% in drawdown, so I'm going to need to start dealing with some of this Aussie if it breaks the low. So I'm watching this carefully this morning. So Aussie New Zealand's low here. I'm going to wait for the daily candle to close. Obviously, it doesn't look very good at the moment. It looks very bearish, but we're in the morning of London, so this day is nowhere near finished yet. Obviously, this looked like a hideous candle, and then it closed like that. So what I'm looking for basically is close today. So if today's close is below that level, I'm going to start scaling out of a little bit of it, and looking to get some really aggressive positions on this one, and basically just going to have this up on the chart on a monitor, and I'm going to focus on just scalping it to try and get out of the position, because it's just not getting anywhere at all. But it's not going down either. Yeah, I mean, this, when we pushed down, this was the final push to the down side, and we then stalled. We were like, nope, can't make it any lower. We can't make it any higher. No lower, no higher, no lower. You know, unless this breaks and holds below that level, and even if it does, you could easily get a down day followed by a bullish engulfing, and then we're back to square one. And this then would be your wick off spring. This would be your liquidity run, which would then signal a hold at the high and then a break. So it's not over by any means yet, but it's still not looking good. It's just they have got no strength in the Aussie, which is just annoying. But you know, and it's been such a lovely thing to trade. It's annoying when it lets you down. I made loads of money out of this in the last year. I'll have to have a look at the statements, but I've made way more than I'm in drawdown on it over the year. But just this bounce, that it's probably the worst timed trade I've had for a long time. It is the worst timed trade I've had for a long time, because I've just been merrily trading it long, and that point there is exactly where it all went wrong. They decided not to increase their interest rates by 0.5%, and as soon as they did that, the market was like, what? Boom, boom, boom. You know, just but you know, there's only a certain amount of time a currency will stay like that, usually 2 to 3 months, before it will recover, just naturally, because people will be taking profit on those shorts and factoring in the correction. Yeah, when these things happen, the Bank of Australia is watching this now and going, we need to do something about this. So they will adjust to make sure that they start to get on top of it, because it's not in their interest. It's not in any country's interest to let their currency drop, especially against New Zealand, their main trading partner. You know, it's so it will recover. It's just taking its sweet time at the moment. Squeeze. So the indices, after that initial drop, seem to be stabilizing a little bit. So straight off of ADR, look at that for an ADR hit. So we're finding buyers in this propulsion gap at the moment. So is this going to be a bounce? We will see. So ADRs today, we've got a few obviously happened. Those Swiss pairs, when they all pushed hard against me, took me into a massive drawdown, but they all came back in the end. Yeah. Push and pull. People got to take profit. Don't forget, yeah. The banks that started shorting here are still short. They're adding. This is them adding. This is them adding again. At some point, they're going to unwind their positions. That's what the profit take move is. It's the unwinding of the bank's positions to make the profit, or unwinding of the hedges. Yeah, the Australian companies or the New Zealand companies that have hedged their milk exports, for example, will be unwinding those hedges. So those hedges get entered, and it takes quite often as long to unwind them, which is why we get the buy cycles and the sell cycles, because he's talking tens of millions of Aussie and New Zealand dollars in these moves. You can't just go, oh yeah, right, bang. That's an intervention. That's what the Bank of Japan does. So it takes a while for them to unwind. Morning, Tony. Am I understanding this right? On the breakout strategy, you don't wait for the candle that breaks the 5 or 15 minutes to close before entering. No. So I just use pending orders. The problem with that strategy, and you can do that if you want to. I've tested this. There's, like with any strategy, right? There's a plus and a minus. If you use a trailing stop, there's a plus and a minus. If you use a break-even trade, there's a plus and a minus. If you use a pending order to enter your position, the plus is you get in here, not here. If you use a candle close, the minus is you miss all of that. Yeah. The plus for waiting for, there's no plus or minus to wait till the candle closes for a false breakout, because if you get into a false breakout situation where it does that, it doesn't matter whether you got in there or there, does it really? Except your risk, depending on how you're calculating your risk, that might be different. But yeah, no, that's the sensible thing to do. Wait for candle close to confirm the breakout. But on a day like this, we've seen breakout candles like that. If you get in down there, there's a high probability it's just going to retrace immediately. So what happens is you get into your position and immediately go into drawdown. The other negative side is, obviously, if you're using opening range high for a stop, the stop is further away, therefore your position size is lower, therefore your potential return is smaller. There's no plus or there's no right or wrong. I've tested both, and there's no perceivable edge that I could find that makes much difference. So I wouldn't worry, to be honest. Personal preference. The Price Action Toolkit works on candle close. So if you use the Price Action Toolkit to take automated opening range breakouts, that works on candle close. The new EA that I've built works on pending orders placed. So because there's no difference, I couldn't. It swings. It's like everything. It's just swings and roundabouts. Yeah, you'll have days where you'll look at this and go, "Oh, if I'd have waited for candle close, I would have made money." Then you'll have days that when, "Oh, if I hadn't have waited for candle close, I'd have made twice as much." Some days it's going to work. Some days it's not. There's no strategy that's going to work in the same way every time. You're always going to have an advantage. Today, the advantage was taking the pending. Yesterday, the advantage would have been not to take the pending. I haven't got it on there, but yesterday's opening range breakouts, you would have not wanted to take the pending because you just got whipsawed. So if you'd have been waiting for candle close, you wouldn't have got whipsawed. You would have in the end, actually, but you wouldn't have got whipsawed as fast. But, you know, if you're going to have pain, you might as well have the pain quick. Neil, a bit off topic. I've been watching the Boocamp. Can you explain your reason for using the MA72? So there's 72 trading days in a quarter, basically. Before you go off and do the calculations, you go, no, there's not. Sundays are included in institutional reporting, and Sundays are a trading day. The market's open on a Sunday. And it is a trading day in New Zealand. So that's why the calculation for 72. 72 in a quarter, 24 in a month. Hence the 24 and 72. So they're basically the institutional reporting levels. So institutions report their profits on a monthly and a quarterly basis, and they have targets to hit monthly and quarterly. So the hedges that they put into the market tend to be either monthly hedges, which is why you have contract rollovers monthly on options and futures and things. So these are representative of institutional cycles. That's all. That's the reason behind the levels. If you went with a 20 and a 20 and a 50, you know, I mean, there's not a massive amount in it, but with any moving average you use, you know, someone will say, oh, if you'd look at the 200 bounce there, look at the 200 bounce there, right? Look at how irrelevant the 200 is there. It missed the 200 there. It slammed through the 200 there. It rejected the 200 there, or did it? I don't know. Doesn't matter. Yeah, everybody, you know, I've had people say to me, that's a ridiculous moving average to use. It's pointless. If you'd have used the 50 and you'd look back in history, it has bounced off 3 more times. It doesn't, first of all, it doesn't bounce off of the moving average. The moving average catches up with price. There is no such thing as a bounce. A moving average is plotting the average. So it moves up and down on a daily basis. It's a stupid term, moving average bounce. Moving average crossover, however, is a more realistic thing. But you know, people say, you know, you should be using a 20, you should be using a 100. Why don't you use the 100 moving average? I don't know. Why don't you use the 72? Personal preference. Doesn't make the blindest bit of difference. Every person that gives me a moving average, I can prove it failing 100 times, and they'll argue with me that it works 100 times. Well, there you go. You've got a 50% strike rate on it, haven't you? If you're using the bounce that doesn't exist. There's no right or wrong with anything. It's just preference. But these are the reason behind these is there is a logical reason behind these. These are, you know, we move, and for a quarter, for a month, we move, and then we pull back, and then we move. So the cycles, the profit cycles of the market, mean they get respected nicely. That's all. May I ask why you're using those MA then? I just explained that, didn't I? Contrary. How far back is your ADR calculating? 10 days. Nasdaq's just rolling over again. I'm going to look at the ADRs in a minute. My focus, as you can probably tell, is on the indices this morning, because I may be able to pay my mortgage for the next quarter this morning. And then I can relax and not have to worry about anything over Christmas, which would be nice. If I can hold. I'm trying not to look at my P&L. It's really put me off. ADRs. So this morning, we've got some weeklies hit already as well. So your weeklies, obviously, most of these are CAD and Euro based off of the moves that we've had this morning, I guess. But your ADRs today so far are the Aussie yen. Let me just scroll out a little bit. You can see them. So big, strong move down there. All the yens have hit basically. So Aussie yen, CAD yen, Swiss yen, Euro yen, Pound yen, New Zealand yen, US yen. So it's yens basically. So a lovely big strong yen this morning. I'm looking for shorts against the yen at the moment. So I would be taking ADR hits to the upside and looking to short it rather than trying to mean revert what I think is going to be powering up, which is the yen. So I'm leaving these, but they will, this move here, they'll be taking profit on this move. Whether or not they get very far, difficult to tell. We've got all the news on the US this afternoon, which we moved the yen as well. So we might get further movement off them, but reversal alerts so far working on all of these at 125 ADR by the looks of things this morning. Haven't had one on the euro yen yet. The euro is very weak. Pound yen just went beyond 125 ADR, sitting in a propulsion gap at the moment. So that low there and that low there were broken by that candle. So this is where they added to that position. See if they're going to hold and add again. Same with the New Zealand yen. Yen came straight off 100 ADR. And US dollar yen, same 125. So they're all bouncing, but not very strong yet. We'll see what happens on those. Weeklies, you've got Aussie CAD. So that came down nicely this morning, taking out the highs of yesterday. But looking at the weekly on that, the vast majority of that was obviously caused by this huge move on Tuesday. So your weekly range was hit yesterday, wasn't it? 158. Oh yeah, sorry, this was the one that was hit in one day, wasn't it? We just did the weekly range in a day, basically, on this. This is Canadian dollar drop. So Euro odd has also hit average weekly range to the downside today. It's 3.7 off of 322. Actually hit yesterday, right at the end of the New York session. Came down, taking out the lows this morning. So potentially that might be a nice push back up into there. Euro New Zealand, again, massively strong New Zealand dollar still, coming down very, very, very hard. Again, that's what I would be looking to target, that propulsion gap at ADR. Euro is kind of proving me wrong this morning, isn't it? I was expecting some strength on the euro, but a bit weak this morning. New Zealand CAD, again, I'm in this one at the moment. I haven't looked at oil this morning. So New Zealand dollar CAD as well, massively extended. Again, we did most of that day. So I put a fib on this one, didn't I, on the 4 hour. Looking for where we're going to pull back to. So we need to extend the fib and keep extending that fib until we get some kind of, if we get an ADR today, that is probably a good spot to start getting aggressive on this. Big strong push, obviously on this one, looking for a shallow pullback somewhere around the 23.38, medium strength strong pullback somewhere around 50.61. So when this thing does start to turn, and it looked like it was starting to turn there, but didn't get the reversal alert. As soon as we get that reversal alert in and retest, we want to look at for where we're probably going to be coming back down to on the profit take move. So, one of two things is going to happen on this. We're either going to continue to trend up, which means we're going to need to have a very weak US dollar and a very weak CAD moving forward, or we're going to start to reverse and either go into a wide range or continue to the downside. But New Zealand dollar is obviously doing very, very well. So I suspect more likely if we get that strength in the Canadian dollar, we'll start to pull back down to these sorts of levels and then maybe go into a range for a bit. Let it have a bit of a rest, really. So that sort of movement. But we want a pullback on the move. The last pullbacks we've had on this, haven't been particularly big. So in reverse, you could get something very easily like that only. But, as long as you're, that's 225 ADR. So that tiny pullback that we had there, if you measure it, let's say this is that move, the smallest pullback you've had is 290, which is 3 ADR. So, you know, back down into, and again, extrapolate the moving averages. You'll be pulling back somewhere into the moving averages ready for a next leg up, which is why we always try and keep our average somewhere around about 100. I mean, 100 ADR is where you want to keep your average. But I'm sitting at 175 ADR, my average on this. You know, pullback on this is going to be 3 ADR. So I was trying to get out of. It's just hideous waiting game at the minute. So looking at oil, we held yesterday. So we had a nice push up yesterday. We got the reversal alert on the daily, so we took that high up. This was what I was looking for, this high. So I banked some profit on this one yesterday. Banked just over 3% or something on this yesterday. We've got the high broken. We've got the 4-hour reversal alert, the hourly reversal alert we had days ago. But this was the level I was looking for. We tapped up into it there. I put my trailing stop on and I got trailed out up here somewhere. So we got the break, and the nice thing is we held the break through New York. And this morning we've held it through Asia as well. And obviously this morning it looks like we're pushing again. So I think we've got a very good chance now of that move that we saw. This was where we got the fake news with the Saudis putting a cap on oil outside of OPEC's guidance, and then them turning around and going, no, we didn't. Manipulation, yeah, to take all the liquidity, right? So what happened? Actually, no, that was the Saudis here. This was the Saudis there. So that was a liquidity run. Everybody saw that manipulation and went, yeah, long. Stops under the low, taken out. So there's no liquidity. There's no long liquidity left in the market now. The liquidity now is sitting under here, underneath the $75 a barrel level. So the people that have pushed here, made this long move happen, broken that high, that's the next target. If we get that broken, we've got a very, very good chance of running again back up to the $90 a barrel level. I'm only looking at that at the moment. I mean, 100 is obviously what the market is calling, but I'm looking here because we thought we got that last time, didn't we? And look what happened. So looking for a structure every time we get to a high like there. Yeah, every time we get to a level we've rejected, you need to be thinking, I need to take some profit if you're longing this. So, you know, take some here. Actually, I'll be out there. My break-evens, I don't think my break-even's even there, to be honest. Yeah, my break-even's here. So I'm at roughly, this is kind of where I'm looking initially, probably to get stuck, which is ADR. So, but I shall just keep scaling into this, I think. I like the look of it now. Famous last words. How many times have I said that? So yeah, we'll see. But, we need that high broken, basically. So an ADR hit would be absolutely spectacular today. I'm not sure we're going to get it. So yesterday we had oil inventories negative, which is very good. So where are we? Wednesday, 3:30. Yeah, so we were expecting 3.2 million barrel change. We got 12.6 million negative, which is obviously positive. Less oil available, higher pricing. How many times have we seen that? And it's completely ignored it and gone the other way. Again, the market doesn't seem to be driven by this at the moment. It seems to be driven by OPEC caps and obviously Russia. So at the minute, we're a little bit less inclined to believe the news. We're not seeing necessarily the right things coming off the news at the moment. But that's good. You know, anything green is obviously good for us. So longing oil. So happy with the news yesterday. Obviously, next news is next week. I don't think we've got any OPEC meetings coming up. Oh, yes, we have. Oh God, and it's on a Sunday. Right, so if you're long oil with me at the moment, I would get out on Friday. I will be getting out on Friday. Because what you don't want is this something happening here negative for oil, and you're going to get a big gap down on Monday. So I will get out on that by Friday and be flat. I would, just in case. Is that new? I didn't see that on the calendar before. Mind you, I haven't looked through. Yeah, so this is the big one that's held twice a year. So important meeting Sunday for oil. So be aware of that. So any oil positions you've got on that you want to take. I mean, you've got two options. Don't forget news can work for and against. If they come out on Sunday and say they are going to put a cap on production and all the main oil producing states agree with that cap, we're going to see a massive increase in oil prices. If they come out and say the opposite, we could obviously see a massive drop. So it's quite an important meeting. So it's your decision to make, obviously. If you go flat and it flies, you miss out on some profit. If you go flat, bank your profit, and it tanks, you're rubbing your hands. Yeah, this doesn't. You're never going to catch the top, and you're never going to catch the bottom. Whether or not you stay in speculatively and flip the coin is each individual trader's decision, isn't it? So, personally, I'm going to go flat on it just because it's oil and it's hurt me. We've fallen out of love. So I'd rather be flat and miss a load of profit than be stuck in this thing. I can't see where it would go if it went down, to be honest. The levels that we identified as support have held. Yeah. So I don't think it's. I mean, it's obviously got these areas down here, but we're talking sort of $60 a barrel. I can't see it getting anywhere near that. Mind you, I said the same thing about we didn't get to 70, but even 75 a barrel, I was looking at 80 to 85 to hold. It didn't. So, market does what the market does. People say in the Telegram group and things and all over the web, this thing's got to go to X. It hasn't got to do anything. It doesn't do anything. It doesn't even know you exist. So, what you think is totally irrelevant. What it does is what it does. And it's how you manage what it does is how you make money, not being right about a trade. It's being in a trade and managing the position, not trying to guess where it's going to go. We know it's going to go up and down. We just don't know when, and we don't know where it's going. We can guess. That's the best thing you've got, isn't it? You guess. So be careful with that. It's a lovely push at the moment. So if we get yesterday's high broken, we'll be looking for last week's high to be taken out next, which is 82. So basically 83 a barrel is there. So that's 83. So there's your next major sort of resistance area. And then obviously above that, we're looking at 85. Whoops. So that 85 area, which is where we got the initial bounce and support that finally broke. That's 125 ADR. So interim target, I would say, is there, but depends where we are Friday, doesn't it? Oh, hello. NASDAQ just dropped out of bed. So NASDAQ's just taken out. I can't really. It's either super zoomed in or miles out. Can't see anything. That's a Globex low gone. officially now. So the floodgates on the US indices now are officially open. So the main sticking points you need to be aware of is there and here. And then obviously down to here. So these areas where the sellers were trampled, basically. This is where we will potentially find buy zones. So, I mean, you can see on the propulsion gaps, basically. I don't know why I'm highlighting the candles, but the propulsion gaps are the one that we're in now and this one here for the US indices. Anybody got any other pairs they want to look at? I haven't looked at the RSIs today, but RSIs are going to be dominated, I would imagine, by Canadian and US, which, yeah, seems to be pretty much. Oh, and New Zealand dollar. So 4 hour, you got Aussie CAD. That's coming down off of extension. It's only just got there. We got there. You know, this has been pushing, hasn't it? So Euro New Zealand massively extended to the downside. New Zealand dollar strength. Again, I kind of like this at the moment because I fancy some longs on the New Zealand dollar. But at the moment it's still very strong. I'm still struggling to find the ability to hit the buy button on the euro, but I kind of like it. Euro New Zealand as a long. Pound New Zealand, definitely don't like it as a long. This is probably the one that will push because we got this low taken out. So this is the low of the range. Remember, I had this. We had this range drawn in, which was these lows, which just held and held and held and held and held. They finally broke yesterday, so we are now here. For you wick-off traders, basically this is your wick-off spring. If we push back up and hold above this low, this is every piece of liquidity for the last month gone. Every long position taken out. After that, the banks typically will manipulate long. Now, you've got a weak currency here that you're longing against a currency which is massively strong at the moment. But every trend has to come to an end at some point. And this is the theory behind wick-off. It's the reversal after the accumulation. So I've always found it very risky. And I've always, you know, you see them. When you look at a wick-off setup, it's really easy to spot. I've never really traded them, so I don't know how many work and how many don't. But that's the theory behind it. So it's the same as everything. You know, there's everybody, you know, all these smart money traders out there that teach smart money concepts and all this sort of stuff. They're all teaching exactly the same thing in a very slightly different way. But yeah, liquidity runs happen, we know. So if this breaks above and you get a 4-hour reversal alert, or if you wanted to get aggressive on it, drop down to the hourly. You're just getting it now. There's a very nice long with a 50 pip stop. And you should come and accumulate up at the highs of the range before you break out to the upside. So potentially a good move there. The US indices are finding some buyers at the lows. So yeah, we've got that one, pound New Zealand. We've also got the New Zealand dollar CAD. We know about, I'm in this already, have been in this for what seems like forever, just embedded and squeezed. So New Zealand dollar CAD has just been a short, it's been a mean reversion short for about 3 weeks. It's just not been reverting. DAX has just taken out the new lows. So it's just taken out ADR. I find it so difficult to hold past ADR. It's one of my my problems, one of my many problems. But I spent months researching ADR, and I just every time we get to an ADR, especially on an index, because the indexes they're a little bit less resistive, I suppose, to ADR, or more resistive to ADR. You know, just I've seen so many times bounces on ADR, but equally, you know, we are not in a normal situation today. We are in a potential correction of an overreaction. So, you know, there's no reason why we can't just get another 200 ADR reversal and what they call an A-shaped recovery. It's just very hard to hold it. But we have got confluence across all indices at the moment. They are all still making new lows. So, you know, the lows are holding. Got a nice propulsion gap there on that break. So, just, you know, it's all looking like it could continue, but we are exhausted. But then we were over exhausted yesterday. So, who knows? Psychology. This is the problem with trading, isn't it? It's your brain that's telling you. Your brain is trying to second guess what's going to happen. If you just let what's going to happen, you're fine. If you're trying to second guess it, but the advantage of second guessing it is you take your profit. I can bank right now another $2,800, or I could let this run to potentially 5 to 10K. Have you got a mortgage payment to make this month? You know, those are the decisions you have to make as a trader. The home runs are lovely, but at the end of the day, you've got to pay the bills. So Dow is just attempting low of session, which it's done. So still heavy. You know, look at how far potentially we have got to fall down this chasm. And I'm sitting here looking at this thing, should I take profit on it? Because I've got $3,000 sitting there in an open P&L. But at the end of the day, what's the potential? I've got $3,000 sitting in profit there. Think about what the reward is down here if this happens. Let's say we don't get the Santa rally. And what we're actually going to get is the Santa decline this year in December. I'm sitting here. You know, it's just that's the bit that you can't teach anybody. New Zealand dollars. So obviously all these New Zealand dollars, New Zealand dollar CAD, New Zealand dollar Swiss, massive strength off of the New Zealand dollar, New Zealand dollar US as well. Obviously got a little leg up yesterday with the US dollar. So a lot of movement potentially to the downside expected on the New Zealand dollar. This one obviously has got a lot more chance. You can see these movements here are strength in the US. If that's what we're getting now, this is a lovely entry, New Zealand US, nicely extended. We're extended on the hourly as well, and embedded. So a little bit of a Christmas tree going on at the moment, but M15 reversal on this one you probably just had. No, not quite. Oh, we just made a new high. So you did have a reversal alert on this morning. No, you didn't. Yes, you did. Yeah, you had a reversal alert this morning on it. Just invalidated. They're just taking the Asian high liquidity. But since London, this will be your first reversal alert on M15. So good opportunity there as well. And US dollar yen. That's an ADR as well. So lots of opportunities out there. We are starting to slow down. Got some rejection showing at the moment. Sorry, I'm not paying any attention to chat this morning. Just took an aggro on Aussie New Zealand at the low. Okay. Yeah. Just about to get a reversal alert on that. Yeah, I'm not. Only 20. Yeah, I'm not going to take. Okay, so that's 0.8% risk on that one. And obviously you can see my average just jumps, and this is aggressive drawdown control. This is the whole purpose of it. My average is now sitting under 125. It was at 175. This is what the aggressive drawdown control does. It brings your average down. If this move works, I will probably take TP here, and then I will reduce. Yeah, and you just keep doing that until the move starts. So as long as you're keeping your average close enough, yeah, we just need an ADR hit. We need an extended ADR hit to the upside now. If today we did a 125 ADR, I'll walk away. I wouldn't walk away. I would bank profit and then do the drawdown control. But and if it doesn't work, it's going to be a percentage drop. That's fine. But yeah, it looks good down here. Nicely extended and embedded on the 5 minute. 15 minutes just touched as well. But this is the trouble with this one. This is why I've it's one of this is a prime example of actually what a squeeze is. It's a push accumulation, push accumulation, push. Yeah, you don't get the profit take. So a normal trend is like that. Squeeze has more of an accumulation drop profile than a trending profile. That's where you get caught out. You don't get the profit take move. That's what we're doing. We're mean reverting. It sells when the buyers step in. If the buyers decide not to take profit, that's when you get the squeezes. New lows on the Dow. That's just made another new low. NASDAQ just made a new low. DAX is just attempting a new low, but at ADR, so we might start to struggle here. But these are the types of days where ADR goes out the window. But look at the DAX. Right, this is the DAX move. This is the propulsion gap from the DAX move off of Powell's speech. We've done it. We're done. So in theory, this DAX move is over. We are back to accumulation, aren't we? So in theory, if we're going Santa rally, that's now done, isn't it? So this is really where the DAX trade, I'm thinking of taking it off. I've got just over $2,000 on it. I'm thinking of taking it off because that move's done. Look at the NASDAQ though. We and the S&P and the Dow, we are nowhere near, because this is not the US session. This is the Frankfurt session. This is the DAX's session. That's why the DAX didn't move as violently, because it happened to the New York stock market, not to the Frankfurt exchange. This one has still got plenty to go. But if these indices are going to come down and undo this over the next couple of days, the DAX, being part of the same stocks in the same sectors, will also get trampled, which is why I'm watching all of the indices as a whole on my other monitor. So my other monitor's set up, just watching all of them. Okay, this is really badly set up. This one. Move that down there like that. Yeah. So basically, I'm watching all the indices on my other monitor, and just monitoring what's happening with all of them. If I see this do that and these do that, that's my cue to get out of the DAX. Because if I see sector buying in the US stocks, the DAX is likely to push up. And obviously vice versa. If I see the DAX starting to reject as it is at the moment, and the US indices all doing the same thing, you know, but if I see these guys pushing down like this and the DAX trying to push up, that gives me faith to stay in the DAX because the US indices are still selling off. If the DAX is trying to push up while the US indices are selling off, the likelihood is the DAX is not going to succeed and it's going to start another leg down. So it's important to be aware of what all the indices are doing at the same time because they all work in tandem. Because the sectors, the stocks are obviously all in sectors. So, you know, if someone's buying aerospace sector, we've got stocks in the DAX in aerospace, we've got stocks in the NASDAQ, we've got stocks in the Dow in aerospace. So yeah, if the aerospace gets bought up, all of the indices will be bought at the same time. Fund 3. I'm tortured in Aussie CAD. I presume you mean tortured. Tortured. Aussie CAD. What, you're short, I guess, are you? Yeah, I mean, Aussie CAD is yeah, I mean, it's a big rejection this morning. Well, it's not big rejection. I mean, you're still, you know, you got a high, you got a low, you got a lower high. That's all you got at the moment. You could easily get a lower low, couldn't you? Yeah, we're waiting for CAD. Obviously, we know the Aussie's weak. We just need the CAD. We're waiting for the CAD. So oil. Oil and US dollar is what we need. But after this, obviously, the market's in a little bit of a shock at the moment. I would like to see your trading setup devices, drawing devices, monitors, chair, etc. There's a picture of it actually in the Telegram group. Photos. I'll find it. Hang on a minute. I'll show you my setup. Go on. How far that back have I got to go to find that, do you reckon? When did I do my office? Bear with me. Somewhere around here, I reckon. Oh no, that's the king, that's the queen dying. It's before that. There's my poor old broken Porsche. Just flicking through the Telegram. God, there's a lot of photos in this Telegram. Look, just here's my car. My poor broken car. I was in that. I sat there. That wasn't a fun day. Oh, we post a lot of crap, don't we? I think I did a video, didn't we, of my office? That's my espresso. Oh, that's my new office, right? Okay, so it's just about coming up any minute. It's here somewhere. Jeez. Too many charts. That was futures. Here it is. No, that's not me. That's somebody else's. All right. So, okay. So that's someone else's. So they were probably posting in reply to my picture. June? Blimey. Is that far ago? Oh, yeah, this is futures. So it's probably around here, isn't it? That was me going on holiday. That's me doing one of my lovely pictures. That was my holiday. So I did a snapshot like they do on all the I'm going to make you £1 million and you're going to be able to buy a Lamborghini. So I thought I'd do one of those shots. I was just going on holiday. I'm not that rich. I look there, find it. I don't know. It should be obvious. What the hell's that? Oh, that's my car. Somebody hit me head on, basically, on the wrong side of the road. I was on the right side of the road. They weren't. I'm very glad I was driving a Porsche because German engineering, it just went, nah, I don't care. It didn't actually. It really hurt. I was in bed for 2 weeks, but I can't find my office. I will try and find. I'll try and find it somewhere. It's in the Telegram group, but the Telegram group's just got 1,000 images in it. Anyway, I'll find it. I'll tell you what I might be able to do actually. Let me just see if I can find it. I've got a picture of it, which is probably. It's not going to be in order, is it? Why doesn't it sort it in order? Sort by date. So just talk amongst yourselves for a minute. Someone sent me on a mission now. I'll find a photo of it somewhere. But I've got too many photos. I go to loads of car shows and stuff, and I've got way too many photos. Oh, there you go. Well, that's one photo. Oops. So, oh, that's my old desk and my old setup. No, that's not right. So it's after that. I don't know. I'll find one. I'll post one. Anyway, it's always good looking. I love looking at people's trading setups because it's interesting. You only need one monitor, but I have 3 sideways. But my new office is very cool. I've got a lovely wooden surround on my back wall with LED lights and all sorts of stuff. I've gone a bit gamer. Do you only trade reversals exclusively? No, I trade whatever's moving in any way, shape, or form. Mainly mean reversion, though, yeah. Amazing how Telegram had enough storage for all the media. Yeah, just imagine they've got some pretty big servers. Okay, so Nasdaq's falling, still pulling back a little bit now. DAX is holding at the moment. But we are sitting here in this propulsion gap. So there's 2 propulsion moves basically yesterday. That one was the initial one. This was the secondary push. So we're starting to find a little bit of support here. So I think what I'm going to do is I'm going to take off my DAX short. I'll tell you what I'm going to do. Let's put 100 pip trader on it. I'm just going to put 100 pip trader on it. We're going to get another leg down. We'll get another leg down, but I'm going to put 100 pip trailer on it, which locks in 2K. And I'm going to leave my Nasdaq running. So the Nas is there. I've got a $400 risk on that, which I'm going to reduce to. I'm not going to go break even on it. I'm still going to risk a couple of. I'll go $300. Basically, the whole premise of this move is obviously mean reversion on this move. So it's either going to work, isn't it, or it's not. And if it doesn't, there's no point in taking $500. because they're going to run liquidity at the highs. But if they run liquidity at the highs, I'm not convinced it's going to get back down here today. So I'm going to risk some. I'm going to leave it room to breathe in London, because don't forget we're trading the US indices. This is going to really move in New York. We've got news events coming up as well. So basically, I'm just going to give it $300 of risk. I'm going to be banking through. I've banked 1,500 this morning. I've got $2,000 locked in on the DAX. So there's $3,500 banked. So that is $300 with a potential reward if we get an ADR move of another 2. So that's $6,000. So that's my mortgage done in a morning session. But saying that, I am down 4% this month, this week on the funded. So it actually is just about, it's getting me back into profit basically. But what I might do, so if we are going to get an A-shaped recovery, I very, very much, I can't see them doing a 200% ADR move back down today. I really can't. Tomorrow, yeah, potentially. But if they are going to do an A-shaped recovery, that really is where I would want my TP to be, down there. So if we get a nice drop down to ADR today, what I will probably do is remove half of that. Don't forget the EA will also be taking trades for me, so the EA might get me into further continuation. And then I will probably take half of that one off wherever we end up towards ADR today, and then let the rest run and see if I can get a runner down to the bottom. That's the plan, but it's not worked yet. So right, I'll leave it there this morning. Be aware of news. Obviously today we've got the PCE at 130. So that's the purchasing index. We've got the PMIs this afternoon at 3:30. So those are 2 big potential moving events on the US dollar, hence also on the indices. If we get a big pump and positive figures out of those, we get a drop on the indices. So pray for positive figures, basically. If we get green here, we will get that recovery on the indices. In theory, we should get a strong US dollar this afternoon. If we get negatives here, I think it's going to fuel the fire that started yesterday. We might well get a continuation push. And if that happens, I suspect, we may be looking at the start of the Santa rally here. But even if this is going to push, we are going to get a Santa rally. It's not just going to go like that. Yeah, we're going to get push, pull, push, pull, push, pull on the way up. Yeah, push, profit take, push, profit take. So if we are going to get that Santa rally on the US indices, specifically S&P is where it's kind of historically measured, then that's where it's going to happen. Okay, but look at where we are. All you trendline junkies out there, they're hitting the sell button. There's limit orders sitting here like you wouldn't believe, trying to get this thing back down again. So, there is a lot of argument for market structure continuation. We're in a recession. Yeah, this is where we're looking to go. We'll see. Time will tell. Certainly rejecting at the moment. So I'm stopped out the DAX. It's a nice morning. 3,600. That's a prop firm pass, basically. Nice. Okay. Anything you need? Come in the Telegram group. If I like trading with the trend only, what's the best time frame I should use? The market reversal alerts indicator. If you like trading with the trend, you have to define what the trend is. The trend is the current movement on the time frame, right? So the trend is right. So the trend at the moment on the 4-hour chart is up. Yeah. The trend on the 5-minute chart at the moment is range bound. The trend on the 1-minute chart at the moment is down. If you like trading with a trend, you want to be shorting at the moment if you're trading M1. If you're trading hourly, 4-hourly charts, you want to be taking longs. So you have to define what you mean by trend by the time frame that you're on. If you want to trade with the daily trend, you want to be taking shorts. Yeah. How you trade is dependent on you and what time frame. Dax, I hate you. It's my fault for stopping myself out. But I can't leave it. It's $2,000. And it's ADR. That's the only reason I'm taking it. And hopefully that's a good indication. That's partly what ADR is for. This thing's done its day already. You said it's done its normal movement of the day. So if you're happy with it, take it. If you're happy and you know it, clap your hands. But yeah, trend is based on many things. A lot of people like to trade with the higher time frame trend on the lower time frame. So, for example, on the euro US dollar. What the hell? Why have my candles suddenly moved from the foreground? That's weird. So euro US dollar. Current trend is up, obviously. So if you are trading with the market reversal alerts indicator and you want to stay in line with the 4-hour trend, you would enter on 15-minute and take 15-minute reversal alerts to the upside. I'll tell you why it is, because I'm trying to do it on the Price Action Toolkit rather than on the proper chart. So yeah, euro US dollar, obviously, daily trend is down. Yeah, again, your time frame, your trend identification is, are you using the 200? Are you using the 72? Are you using the 20? Are you using the 50? What are you using? You've got to make your decision up as to what you're using for trend. But the daily trend for most traders at the moment that use daily trend as their direction, they will use the 200 for the overall direction. So at the moment, we are sitting around the 200. So it's difficult to really define it. But if you were trading 4-hour, trend is up. So therefore, you would take market reversal alerts on M15 to the upside. So there's your entry. If you want to stay in line with the hourly trend, there isn't one. On M5, you could take reversal alerts to the upside or downside. Difficult, no, that one. Not a good thing to trade. Oh, DAX, I hate you. It's continuing down. So there's your 1.5 hour opening range. That is quite often your lot in Frankfurt. US dollar CAD, again, it's very difficult to pick anything at the moment. So, a lot of people will look at the intraday traders that trade the, sorry, I keep doing it on the wrong chart. Intraday traders that trade intraday quite often will use the 15-minute time frame for trend, and then it will enter on M1. So you would have taken an M1 reversal alert there, because the 15-minute trend is up, and you would have taken every reversal alert on lower time frame to the upside. But yeah, daily, if you want to stay in line with the daily trend, I would say you want to use the 200 moving average. Indices selling off another leg. Nasdaq, new lows. So I'm still in this one. Could be trade of the month for this. That makes sense, Rebecca? But you want to use multi-time frame analysis. So if you haven't done the boot camp yet, go and do the boot camp. So go and do the position trading boot. I mean, even if you're not going to position trade, this boot camp is worth doing. This is purely focusing on position trading, but a lot of the theory and a lot of what you're learning here, if you want to use a stop, use a stop. But the theory, the indicators and everything used in here, you can use that with stop loss strategy as well. But that will explain all about multi-time frame analysis. So here, this part 2 is about multi-time frame analysis. Oh my God, Audacity Capital. Hello, we make money by selling seats to people. So I've really got it in for prop firms. There you go. So it goes straight into multi-time frame analysis, basically. So this is all about multi-time frame analysis and why you should use multiple time frames for your trading and not just one, to get tighter entries. So go and watch day 2 of the bootcamp. That will teach you all about multi-time frame. It will teach you about elastic band theory or rubber band theory. Good analysis in there about difference between using stop losses and not using stop losses. I pronounced the name very well. That's good because I'm actually really crap with names usually. But yeah, go and watch bootcamp. Bootcamp, even if it's like anything. It's a free course. It's I don't know how many hours long it is. 5 hours, I think 6 hours, 7 hours, I don't know. But even if you don't trade the way that I trade and you don't use everything in there, you will pick stuff up that will be light bulb moments. This is basically the culmination of my 14 years worth of trading boiled down into 5 videos. The stuff that I think personally is really important to know. And there's lots of different ways of trading. Obviously, everybody can trade in a completely different way, but the theory behind what goes on in the market is the same for everybody. And you need to know how it's working and what it's doing. So the very first video teaches you how the banks manipulate the market. So again, you need to know how it works, how the fundamentals and the news drives the market, what the market participants are doing, how they're moving the market. There's lots of stuff in there that you take bits. That's what I've done over the years. I've done hundreds of courses, hundreds of courses. Probably have done hundreds. Read every book under the sun. I've had multiple mentors, and I've basically grabbed all the bits that worked for me and stuck them together. And that's what you need to do. You need to pick your time frame. You need to pick whether you're a mean reversion or a trend trader, or you're both, and you need to pick whether or not you want to be a position trader or you want to be a scalper, or a swing trader. But position trading is swing trading. It's just a more intelligent way of doing it, as far as I'm concerned. It will teach you all the pitfalls, teach you everything you need to know, and go and watch it multiple times because you won't get it all on the first time. Right, that's me done for today. I will be back tomorrow, same time, 7:50. I'll be in the Telegram group if you need anything, and obviously be aware of what we've got coming up today with the US this afternoon. We've got Kuroda speaking tomorrow morning as well. So if you've got any yens on, be aware. I reckon he'll be pretty hawkish tomorrow, pretty bullish. I reckon we might have some power in Asia tomorrow. We've also got Low speaking. What's Lagarde doing up at 2:40? She's speaking as well. There's obviously a conference, banking conference on, isn't there? Thailand, in Bangkok. That's why. So a lot of talking heads tomorrow morning. So going to get a busy Asian session tomorrow morning. Probably have a lot of volatility during Asia. So all your Aussie pairs, your New Zealand pairs, your yen pairs, probably going to get a lot of movement across the board on those. So just be aware of that. Get some TPs set up if you need to on some positions. But this afternoon, US. So fingers crossed, we get a strong US this afternoon, which will bring these indices down and hopefully make some money on the drops. If not, you get stopped out. C'est la vie. All right, guys, I'll be back tomorrow morning, 7:50, same time. Anything you need, let me know. Otherwise, I will see you in the morning. Hopefully have a profitable day. Have a good one.